Good morning, everybody. It's February the 27th, and this morning I'm going to do the weekly cloud chart ETF market review of the S&P 500 index and SPDR. So here's the usual disclaimer. Weekly cloud chart review, S&P 500 SPDR ETFs and the S&P 500 sector ETFs. Okay, so we're going to jump straight into the Pro Real-Time platform, loading the ETF SPDR sector, looking at the S&P 500 index. Quite a rally we've had since last year, November. Have multiple buy and sell signals based on MACD, bit of whiplash, but we did catch the last rally. Nice, significant, strong rally, but we are looking at a bit of a consolidation of recent moves. Consolidation could last back down to the top end of the cloud here for support, so we could expect a retracement over the next couple of weeks back down to consolidate the recent move and looking for support at the top end of the cloud. So watching very closely for a potential MACD sell signal within this consolidation period, but so far the overall trend, long-term trend, remain up with consolidation risk over the short term. So now if we look at the materials sector, had a nice strong rally, consolidating back to the top end of the cloud here for support, so that could be the next key entry point. Slightly underperformance of the last couple of weeks. Had a MACD sell, so looking for a MACD buy at the top end of the cloud. So that should be a nice entry point when we get to that zone. Real estate, breaking out here, past cloud chart resistance, old cloud chart levels is key. The next levels to watch is up here at 32.48. So far steady grind higher. We've had a MACD buy signal here around about the 8th of February. Nice little rebound here at cloud level. Front end of the cloud still indicate a nice uptrend in place, so it's steady as she goes. Consolidation risk is short-term consolidation risk is possible back down to 31.50, 49 zone. But watch these targets here. These are top end of the cloud targets as your key resistance areas, but steady grind higher. Consumer discretionary, bit of whiplash with MACD buy and sell signals, but we did capture most of the moves over the last couple of months with the MACD signal. Support to come back in, a possible retest of these old highs here for support, and the consolidation is now well underway with pullbacks to the 20-day moving averages is quite good. Front end of the cloud still indicating a strong uptrend is in place, and slightly underperformance here versus the S&P for the last couple of weeks, but so far strong uptrend in place with consolidation risk back down to old highs and consolidation risk to the top end of the cloud. But looks like it's busy pulling back this week, and we could see a retest of 85.64. Consumer staples, bit extended here, broke past cloud chart resistance at 54.34, significant break of key resistance, then broke past the top end of the cloud here, so we're now looking at consolidation of this recent move. It's just the distance between the price and the cloud. It looks a little bit extended from a mean reversion point of view. So we could see short-term retracement back, just a consolidation back down to test these levels for support. But these are significant resistance areas, which should now come in and act as significant support areas. So absolutely critical to watch these levels for support to come in. But steady as she goes, had a nice little rally after a MACD buy, and looking for a bit of a consolidation here, which would be prudent. Energy select sector in a spot of trouble, significantly underperformance for this year. MACD sell signal remain in place. Bit of MACD buy and sell, whiplash at the cloud where it was fighting for support at the bottom in the cloud. Support did not hold. It then sliced through the cloud support zone. This is now a significant resistance zone, the bottom end of the cloud, this entire situation here. It's actually still locked in a downtrend based on the cloud. Front end of the cloud still indicate more weakness. We've had the lagging line from the Ichimoku cloud perspective slice through the bottom end of the cloud, so it's critical to see if it's going to rebound at this level or not. You can see there's a bit of support here looking at the candlesticks, but so far looking very weak with further downside back down to this cloud level at 69.04. So watching very closely to see if it's going to rebound this week, but looks very weak. Weakness down to 69, and short-term relief rally back up to 72, 76 as resistance zone at the at the bottom end of the cloud, but looking overall very weak. The financial spider XLF, nice little breakout out of a trading base. Rebounded from the top end of the cloud, which was very nice. Had a MACD buy signal at this rebound, and it's grinding a nice little grind higher. It's busy with the consolidation, with consolidation risk back down to the top end of the cloud at 24 zone. So we're pretty much consolidations underway. Long-term trend remain up, and watching very closely for any early warning signals in terms of the MACD sell there. But so far so good. Healthcare, bit extended, but strong rally, broke past these resistance levels we were watching for last time. Now watching for the top end of the cloud here at 74.81, critical week to see if it's going to be able to break past 74.81. If not, if resistance comes in, we're going to come back to retest this cloud chart support level, old resistance level, which is now support, cloud support, and top end of the cloud, yeah. So consolidation risk remain. Overall long-term trend remain up. Watching for a MACD profit-taking opportunity here. Had a strong MACD buy after the rebound from the cloud support. So watching this very closely. Healthcare XLF this week to see if it's going to break past the top end of the cloud resistance. Industrial consolidation underway. Broke out of a trading range. Rebounded nicely from the cloud. Had a MACD buy signal. Let's put that in. There. And then we're going to consolidate back to the top end of the cloud for support. So it looks like it's now the consolidation in the XLI, industrial spider, is underway with the top end of the cloud as a key support zone. So watching very closely for any potential profit taking here. But so far the cloud indicates an uptrend, and the top end of the cloud here, significant support zone. Technology, a wee bit extended here. Nice MACD buy signal, strong uptrend in place. Consolidation risk back down to old highs here. The top end of the cloud, but I would see the short-term consolidation is this cloud level here at 51.47, 51.40. Brief retracement of this particular move here is in order. So watching very closely. Nice strong outperformance versus the S&P for quite some time now. So this sector is looking strong, so it's just a question of taking some profit now and then revisiting it when it pulls back to key support areas and old highs, old resistance areas. But so far, very strong uptrend. The MACD buy signal remains valid until proven otherwise. Utilities, a really extended rally, quite too much too soon, but we did manage to break past this 50, 59, and 50.25 level, which we were watching last week as a resistance area. We're going to go back to the highs of September last year at 52 to see if it's going to get there. So what's the 52 area? So consolidation risk is now quite high, because the magnitude of this move is just too much too soon. So we do expect some form of consolidation, pull back to the old highs to support, and old cloud chart shadow these old cloud chart levels for support. So watch out, we could see a brief consolidation back to above the 50 level. Watching very closely for possible MACD sell signal in and around this key resistance area. So back to the S&P as we started. Let's go to a weekly chart just to round this off. A nice little, quite a strong uptrend based on a weekly cloud chart, and consolidation risk back down to the top end of this breakout price is, something we're looking forward to in the next couple of weeks. But overall, long-term trend remain up with consolidation, short-term consolidation risks. I'm watching very closely for any kind of MACD profit-taking opportunities, but we could come back to retest the support areas here at 231 and 233 over the short term. So there's downside risk to those areas. Until next time, happy trading.